A very good morning, everyone, and thank you for joining. My name is Melissa Salah, and I will be your host for today's webinar on the topic the UAE, the UAE corporate tax law for small, medium enterprise, recent developments and insights. Before we dive right into the webinar, I would like to give a brief introduction about our company. ITC Accounting and Tax Consultancy is one of the top and most reliable tax agency firm in the UAE. In a short span of time, our team mastered how to give clients the best tax solutions. You can expect an uncompromised attitude when it comes to quality and professionalism. We deliver a sleek and professional outcome that set us apart from the competition. With the leadership of Mr. Ahmed Sharafuddin, we have already positioned ourselves as the VAT and excise tax specialist in the market. We have a fast-growing team of qualified and dedicated uh, professionals with innovative and commercial approaches to meet today's highly challenging business environment. Highly experienced tax and finance specialists in the industry. International tax consultancy will continue to create long-term relationships with various businesses by having the ability to deliver as exceptional service is satisfactory on all levels of quality and speed as our strategy and proven approach. Most of the customers we serve are generated through referral and repeated businesses. Moving on, I would like to give a brief introduction about our finalists for today's webinar. Mr. Madhat Al-Abd. Mr. Madhat Al-Abd is a seasoned tax expert with a distinguished career spanning significant and influential role of both of the UAE and Egypt. His extensive background include pivotal internal audit and VAT of corporate tax leadership within on the Middle East largest conglomerate. His proven expertise extend across multiple sectors, hospitality, automotive, construction, real estate, education, and healthcare. Backed by a distinguished collection of certification and particular interest in information technology and digital transformation, he stands at the forefront of technology integration and in tax consultancy. Complemented by active involvement in various committees, strong is his ability in infuse his leadership extends to crucial roles, a board member and committee member. He has valuable teaching and training experience, having served as a teacher in various institutions within the realm of tax consultancy. He's specialized in crafting, holistic, and tax compliance, having innate project management skills and an acute understanding of various businesses, approach complex business challenge, marks him an invaluable asset in the
Hello, good morning, everyone. How are you? Thank you very much, Melissa, for the hosting this event and for introduction. I hope everybody is already finished drinking the coffee, having a good day, and wish you all a good day ahead and a good morning. So, without further ado, we will move forward so we can have more time for the questions and discussions at the end. If you have any questions, please feel free to put it in the chat box. And can we go to the next slide, please? Can we go to the next slide, please? So everybody is actually thinking about the corporate tax. It's a hot topic and the hot potato now in the whole country because the country did not have corporate tax before. So that's why we thought about having this webinar in order to have some kind of understanding between the clients and even a chance for anybody who wants to ask a question can ask a question. So a quick start with an overview of the corporate tax law on the timeline. Now, the country announced the corporate tax implementation on 31st of January 2022, and then they released the public consultation document on the regulation in April 2022, and in October 2022 they released the law, which is number 47, and this law is effective starting 1st of June 2023. That means any financial year which will start after June 2023 is having corporate tax applicable to it. So can we move to the next slide, please? Now, this is a summary for the amount of regulation or the regulations issued around corporate tax till 5th of December. Now, as you notice, in the year 2022, we have only one law, which is a law 47, and two decisions. And then in 2023, we have in total 34 plus 16 guides issued from FTA. So we have 34 decisions and 16 guides issued from FTA. So we noticed that the amount of regulations, the cabinet decisions, minister decisions, FTA guidelines, and all of that are increasing and still going on. In the last few months, they have issued plenty of them, discussing about so many various subjects, such as, for example, free zones, such as tax residency, corporate tax on natural persons, small business relief, etc., etc., etc. So many have been issued in this year. And that's why we thought about having this summary. And of course, this presentation will be shared with you after the webinar, along with the recording will be available as well. So we will share with you even in the end of the presentation, you will have a total list, a complete list of the decisions and guides, the law issued so far. Can we move to the next slide, please? So the topic of today is about the corporate tax awareness for small, medium enterprises. Why it's important? Well, when we speak about small and medium enterprises, we are speaking about companies which maybe started a few years ago, or even startup just happening now, or companies which are trying to establish itself in the market, and so on. And I'm pretty much sure that many of you have experience with VAT and excise, and they understand that the application of taxation laws here are they are looking for maximum compliance, and that's why they are extremely taking care of doing all the possible things to make sure that everybody's complying with tax regulation. And frankly speaking, having penalties or fines is not a welcome scenario for everybody. That's one point to look at it. The other point that this is 9% going out of the profit of each organization. For VAT and excise, the person or the client eventually, or the customer eventually pays for it, not the company. But now for corporate tax, the company will pay the corporate tax. That means it's additional cost to the company, and that means it has to be looked closely. It has to be examined properly to understand what should changes to take place in the structure. So The government here have issued regulations specifically for small business relief, which we will discuss in detail. Now, what the corporate tax means for the corporation or any corporate, small or medium, it means that you have additional administrative burden because you have to calculate a tax return. That means you have to do a proper audited financials. You have to do a proper IFRS financial statements. You have to do a proper fixed asset list. You have to do a lot of things in the financial statements to make sure that you are complying with the regulation. That means additional administrative burden. Also, you may need to do structural changes to benefit from or to have the maximum benefit from the taxation law. For example, you may need to change your shareholding. You may need to change the legal picture or the legal type of the company from sole proprietorship to LLC. You may need to create a new company as a holding company so you can get the 0% benefit from according to the law. You may need to do a lot of structural changes. Also, when you are dealing with your customers and your suppliers, you have to understand that you have additional cost element coming into your organization, which is 9%. So from where you are going to adjust this cost or how you are going to handle it as a business. Now, sometimes we have seen situations in the past where structural changes are required to ensure compliance with the law. Why? Because if you are a group of companies and you have transactions between your related parties, then you may think about changing the shareholding in some of the companies to make one tax group to have less burden maintaining documentation such as transfer pricing or such as transactions documentation between you and the related parties. It will make much less administrative burden on you. Now, the compliance and legal adherence, you have to register for the tax. Absolutely. Anybody actually in the country with a license, anybody or any organization or corporate with a license, and even natural persons who have licenses, they have to register for corporate tax. Regardless if they are zero or small company or medium company, the corporate tax do not have a threshold like VAT. Again, I repeat, the corporate tax do not have a threshold like VAT. So yes, you need to register if you have a license. Now, for the second one, which is contribution to business growth and stability. Now, the government here have established a very good approach to promote the business-friendly situation in the market and so on. And that's why they have issued a small business relief. And that's what we are going to discuss in the next couple of slides. Please, can we go to the next slide? Now, we are going to discuss certain points about a small business relief, such as what is it, who is not eligible for it, how does small business relief works. Next slide, please. Now, for the small business relief, what is it? It's actually a support system for small and medium businesses based on UAE for corporate tax purpose. So when they introduced the corporate tax regulation, they issued a decision on small business relief. So they wanted to nurture the startups, small businesses, and so on, in order to ensure that they thrive in the market. So what they have done is, in a nutshell, they have given exemption of paying tax for 3 years with a certain conditions. These conditions will go through one by one in the next few slides to explain more. And the purpose also was to simplify the administrative burden. You don't have anybody who will elect to use this small business relief, do not have to calculate or do a tax return or tax filing, or you will have a simplified tax filing, very simplified. So they don't have to create a lot of documentation. They don't have to maintain a lot of documentation and so on. So many administrative burdens are removed or elevated or simplified for the entities which will take care of the small business relief or will elect to take small business relief. Now, due to that, the small business relief election will result into less requirement for compliance from these particular companies which will elect to do this small business relief. And we will see how in the next slide. Please move to the next slide. Thank you. Now, first thing, who's actually eligible, who's not eligible for small business relief? Now, if you are a member of multinational enterprise, so let's say, for example, if your company is owned by another company outside the country, or your company owns another company outside the country, then you are not eligible for small business relief. If you are a free zone company and looking to use a 0%, you cannot use a small business relief. And if some companies or of the companies are artificially segregating their business into smaller entities to get benefit, this is also cannot benefit from small business relief. So let's say, for example, an organization now which have X amount of turnover, this turnover is exceeding 3 million dirhams. So this organization divides the operation into smaller companies to get this small business relief without a commercial or economical substance. This will not be accepted by the FTA, and you cannot take the small business relief. So now, who can take the small business relief? This is the main question here. The small business relief can be taken by any organization or business which revenue is less than 3 million dirhams a year. Again, the small business relief is eligible for the entities or possible for the entities which have 3 million dirhams revenue maximum per year. And it has also to have this particular amount also in the previous year. Because let's say, for example, for 2023, you have 3 million dirhams revenue or less, then you can apply and you are expecting to have the same in the 2024. Then when you are doing the tax return, you can actually ask for a simplified tax return and utilize the small business relief. Can we go to the next slide, please? So how does it work? It works in a specific manner where actually the companies which are, or the businesses which are earning revenue, and I keep emphasizing on the revenue, the sales, less than 3 million dirhams a year in the tax period. And usually the tax period, as we know all, is 12 months, right? Calendar month. That means you can benefit from that. You can apply for small business relief. And even if you have a profit, which is taxable profit, it will be considered as you don't have taxable profit, and therefore you don't have to pay tax. Till when this is available? This is available till 31st of December 2026. So if we are talking about a company which is doing a startup now, let's say, for example, and they know that they are going to make a revenue less than 3 million dirhams in the next 3 years, they can benefit from this particular relief for the next 3 years. That means they don't have to pay tax, even if they make taxable profit for 3 years. So this is a little bit of, there was some confusion because, even the FTA issued a guide and there was a table in this guide, which we will show later to show you how it's working and so on. Now, there are some points which we need to elaborate on here. Number one, the companies which are asking or going to benefit from or trying to benefit from this small business relief, are they going to have any kind of registration requirements? Yes, you have to register. Do they have to keep audited financials? Yes, they can. That they have to keep audited financials. Can they use cash basis in the accounting? Yes, they can use cash basis in accounting. And what happens if I exceed 3 million dirhams in any subsequent year between now and 26? You will not be able to benefit from the small business relief. So this is year-wise, and it's not 3 years together. And you have to do it every year when you are doing a tax return. Can we move to the next slide, please? Now, this table actually came in the guideline issued by FTA recently about the small business relief. They give examples here. And in this example, you can see that they have given 3 examples. In the 3 examples, they are calculating how much revenue. And then they are saying, yes, this company is eligible for tax for small business relief. And then they are calculating the cost, and then they are calculating the profits, and then they are calculating the corporate tax and payable calculation, which is 9%. As we are all aware, the first 375,000 of the profit is 0% tax. The first 375,000 dirhams of the profit is 0% tax. This is for everybody, except the free zone companies, which are obtaining 0% option or doing qualified income, which is another topic which we'll address in another discussion in the future. So, assuming that the companies or the company we are talking about is getting a revenue of 2.8 million dirhams, the cost is 2 million dirhams. This is scenario number 1 or business number 1. And then the profits are 800,000 dirhams. Usually, if you don't take, or of this company do not take the small business relief, the tax will be calculated as illustrated, 375 at 0%, and then the remaining 425,000 as 9%. That means this company has to pay 38,250 dirhams of tax, corporate tax. Now, under the small business relief, you don't have to pay the 38,000. Why? Because you will be considered, or this company will be considered as not generating any taxable income. The profit is not considered as taxable because they have elected to take the small business relief. And then you have business 2, another example. In this example, again, it's 2.8. The cost is 1.8. The profit is 1 million. This is, of course, a very simplified approach. I'm sure you all understand. Again, the 375 is 0 rated. 625 is calculated on 9%. So this business is supposed to pay 56,000, which they will not pay if they elect to have a small business relief. The same logic applies for business 3. So we can see that there is a good amount of savings if you use a small business relief. And to do that, you have to maintain the conditions or satisfy the conditions which are mentioned in the regulations, such as you have to register for corporate tax, you must be less than 3 million dirhams, you have to use audit financial statements for the future reference and so on. Okay, now this is a simple calculation. Now, can we move to the next slide, please? Now, what is the practical steps for small, medium, or small business reliefs? Now you have, it's a volunteer choice. Nobody is actually, or this is a choice by the company. Each company has to decide, right? In order to do that, you have to actually prepare for it from the beginning of the whole year itself and plan and find out how much the company or the organization will be able or will generate revenue, because I'm sure most of the companies or many of the companies, even if they are not doing a budget before, they have to start doing budgeting now properly and plan accordingly. So, because imagine if a company is generating less than 3 million dirhams a year, paying 50,000 or 100,000 dirhams as a tax is not a small amount of money. It's a big amount of money considering the size of the company. So, taking a look now on the subject and considering all the factors now and trying to think and electing or thinking about the subject from now is a very, very essential thing, so you can plan accordingly. This is actually will be part of your tax return. So you don't have to do anything till you go and file your tax return. But of course, you must do registration and you must keep the records which are for all transactions you're doing, either sales, purchase. You have to pay your expenses, because paying expenses is a necessary thing for you to deduct the expenses. And then you have to keep re-evaluating your or the income coming in the company on a regular basis, so you understand if you're going to cross the 3 million dirhams or not. Because at any point of time, if you're going to cross it, then you cannot actually use this, and then you have to recalculate your expenses and add the corporate tax expense. And we go to the first thing I said in the beginning. Corporate tax is an expense to the organization. And therefore, you have to actually understand your plan ahead. And when you are doing a budget or a business plan or any kind of forecasting, it has to be implemented there. And it has to be understood by the shareholders, owners, and so on, that this is a cost, and this has to be embedded somewhere. Otherwise, the profitability will go down, and I'm sure nobody will be happy with that, especially the owners. Next slide, please. Now, this law is effective from 1st of June 2023. So any company which have a financial year starting after June 2023, let's say, for example, in July or in September or in January, it will have 12-month calendar year for their fiscal year to start doing the tax return. So if the organization is having such kind of situation, then you have to monitor the dates and start registration after you do the planning first for tax. We always recommend that if you want to do registration, before you do that, you have to do a study, plan, assess the risks related to the tax compliance, corporate tax compliance, because you may need to do changes in your trade license. You may need to do changes in your shareholding. You may need to do changes in the legal status of the organization, because as of now, the registration is open only for two types, LLCs and public listed companies. So before you register, we recommend always to have the study or the assessment or the exercise of checking your organization against tax compliance first done. And then after you do any changes in the legal structure of the company, then you can actually move ahead and do registration, because changing after registration takes a lot of time. And you should do it before you do the tax return. Otherwise, you cannot do the tax return without registration. And considering that there is a massive rush expected, I'm sure, again, if I say anyone who in the crowd who attended or who has been here when they introduced VAT will remember that the VAT registration used to take months and months to happen. So they are expecting 3 times the number of registrations which happened in VAT for corporate tax. So let's say, for example, if they have now registered for VAT 350,000, this is according to the FTA website, more or less. Now the expectation for corporate tax that they will have 850,000 registrations. That means 3 times the amount of registration for VAT. So you can imagine the amount of rush and the amount of delays which may take place, because so many people will rush to register before the corporate tax return 1 or 2 months. So it's better to start from now, do your exercise comfortably, because also if you will need to change anything in your financial statements for 2023, that means you have to do it now. Why? Because you have to close your financials, and your 2023 financials has to be audited. That's why you should start now looking into it. Now, for the documentation record keeping, I'm sure most of you already dealing with the record keeping requirements for VAT and maybe excise for some companies. So you are aware that there is a lot of documentation and record keeping requirement already for VAT and excise. Corporate tax is much bigger than that, because you have to keep all documentation related to all transactions flowing into the financial statements. And if we back up a little bit and look to the subject from a higher overview, you have a financial statements which actually resulting into a profit. This profit is derived from so many transactions happening during the year. You have sales, you have purchases, you have provisions, you have accruals, you have depreciation, you have fixed assets, you have a lot of transactions happening all over the year. Each transaction supporting documents must be maintained for the corporate tax purpose. So this is a lot of documentation which has to be kept. Some of it may not be required from VAT or excise point of view. But corporate tax is actually requiring a lot more documentation. Also, why you should start, or why companies should start now, because you have to identify is your company doing an exempt or taxable activity, or because now, let's say for example, a company which is working in all kind of natural resources extraction is exempt by law. Of course, they have to apply to FTA and ask for exemption, but by law, it's exempt. So you have to start identifying the taxable entities, activities they are doing. Maybe you're doing activities which are not on your license, which we have seen with so many clients. So these activities, is it your core business? Are you doing it very regularly, or you are doing it just only for the sake of helping the core activity business, which written in your license? Also, you have to look into your financial statements and find out the expenses which you are putting in, because the organizations has to understand that anything of personal nature cannot be accepted under corporate tax as deduction. And there are few items which you have to look to them closely, like entertainment for clients. They do not allow more than 50% of the expense of the entertainment for clients. So let's say, for example, if an organization is doing a lot of marketing events where they offer refreshments, entertainment, and so on to the clients, the cost of these kind of marketing events, only 50% will be taken in consideration. That means you will actually not be able to take the benefit, the tax benefit of all this expense. Also, another type, such as, for example, charity. Charity has to be paid to a qualified or a specific list of entities, which already issued by another decision. It's about 500 plus entities all over the country. So if you want the charity to be deducted as an expense in your company, it has to be in the name of the company. It has to be to these particular entities only, and many other situations. We will come and we will try in the next period to make more webinars, videos, even recorded videos and so on, and we will release a lot of material about each and every aspect of this gradually. Can we move to the next slide, please? As we were saying, there is, of course, there is a very big importance for tax planning, because as we said, tax is a cost. This cost will reduce the profitability. The main purpose of each and every organization, commercial organization, is profit. So when the profit will go down, the shareholders definitely will not be happy, and most probably their unhappiness will reflect on the people working on the organization. So being faced and faced so many situations like that, it's better to start speaking about the subject, planning for the subject, introducing figures and numbers to the shareholders. To do that, you need to do a proper planning from now, not when the tax return is due, because it will be too late. Now, there are so many ways to comply and minimize tax liability. For each organization, it may be different. As I said just a little bit before, you can do charity and put the charity as an expense. If you're not, let's say, for example, if the organization is not giving salary to the owners, they can start giving salaries to the owners as per the market prices, or as per the market salaries, which they are not doing, most probably not doing it now. And many other things can be done for the compliance and minimize tax liability. But again, this will require case-to-case examination. A quick overview of allowable expenses and deductions. Of course, according to, they said that the accounting standard is IFRS. So your companies has to follow IFRS. So if a company is following GAAP, for example, then GAAP is used in US, that's not allowed or not as per the law. They have to, if they want, they have to apply for an exception, right? which we don't recommend. We say you have to follow IFRS. And according to IFRS, you have many allowable expenses and deduction. Most probably, so far, they did not give any indication about any kind of disallowance for a specific, except the entertainment and personal elements. So let's say, for example, if you have personal expenses for the owners included in your financial statements, it's not going to be accepted as an expense by the tax authority. Also, any expense which is not in the name of the company. So we have been also in so many situations where companies are actually paying by the credit card of the owner. The invoice is in the name of the owner, but it's actual expense for the company. This has to stop, and everything has to be in the name of the company. To have an expense allowed for deduction, the company must pay the expense or have a very clear agreement to pay it on a specific time. If you don't pay an expense for 1 year, don't expect corporate tax authority or the tax authority to allow it. That's not going to happen. And anybody who have gone through that also will know the same. Now just to give one or two quickly case scenarios for effective tax planning. There are so many effective tax planning scenarios. Number one, if you have a company which is not doing anything and just was created before in the past for a specific reason, which this specific reason is no longer there, then you can actually close this company instead of having administrative burden for filing a tax return for something which is not trading, something which is not doing any activity. Also, you can actually do a tax group. So if you have a group of companies, 2, 3, 4 companies, where you can put them actually in a tax group and the ownership is 95% between all companies for the same shareholders, then you can actually make it as a tax group. And many other case scenarios where you can do effective tax planning. But again, we go to the main point where you actually have to do planning, and you have to start the planning now, because changing the legal structure takes time. Having internal discussions with the shareholders, with the stakeholders, takes time. So if we add all this time together, you will find that to prepare for the tax, you need at least a couple of months, maybe more. So it's better to start now. So when you close 2023, your financial statements are sanitized, because they will be used as a base to compare with 2024 by the FTA. So now the next 3 slides are actually a table. If you can move to the next slide, please, so we can show the audience sample. Now these slides will be in the presentation. I will not go through them because this is actually a comprehensive list of the decisions issued and guidelines and so on so far, with the dates and even number of pages. So if you look at the number of pages total, it's over 1,000 pages. And of course, there are so many other information sources and so on. So you can imagine that this is something which requires a lot of work, a lot of planning, a lot of things to be done. So we are now going to take any questions you have. Now, that's actually a very good question. The first question is, what is the definition of SME? What type of companies are covered under this? Now, this is a very fantastic question. Now, from the tax point of view, the SME actually is not defined as a very clear definition. And there are so many definitions for SME, right? SME will include startups. SME will include in some kind of categorization the companies which only one company, not a group of companies. In another definition, which will be, let's say, according to a certain revenue. So this definition, it depends on what we are asking about. So let's say, for example, we will go for small, medium enterprise. Small and medium enterprise usually is referred to companies which do not have massive amount of revenue. It's not a group of companies. It's not a multinational organization. And usually they say the medium company, let's say, for example, is $100 million revenue. Some of the definitions will say that. It depends from one country to another. And even inside the same country, you don't have a very specific definition for it. We will actually try to collect because this is a project undergoing. We'll try to collect the definitions for small and medium organization, establishment organizations from different sources or different legal definitions, and then we will share it with you in a form of article very soon. Okay, so how is this corporate tax? The next question is, how is this corporate tax implementation impact inflation and prices so as to work out fair budget for 2024? Now, all your supplies will increase, and except maybe the energy and all the natural resources. Everything else will increase. And even the natural resources also will increase. Now, you remember when VAT came, it's 5%, but actually you have to understand that the cost resulted from VAT was only the amount which you cannot recover, because VAT is not a cost to you or to the organization as long as you are collecting from the customers and paying to the suppliers, and you are making a net and either paying to the FTA or taking a refund. So it's not a cost to the company except the money which you are not recovering. Now it's for the corporate tax, it's 9% from your revenue. So at least it will impact the inflation by 9%. It may go down because actually this 9% is not on the revenue, it's on the net. So if you take the 9% or the money you are taking and take a percentage on your revenue, you will understand how much your prices will increase, and maybe add another maybe 5 to 6% to that, because the suppliers also will increase the prices and so on, and the economic cycle will work. So maybe you will find yourself anywhere between 5 to 10% increase in the inflation. Let's say, for example, in the examples which we have presented here from the guide, the company which doing a profit of 800,000 dirhams will pay 56,000, I think, if I'm not mistaken, right? If I take the 56 divide by the revenue, then I will understand how much percentage I should increase my revenue. And that's why you should take it from there. Take the taxable or the tax amount, take the percentage against revenue, and then add a margin of maybe anywhere between 3 to 5%. That's my opinion, which of course you can actually start thinking about it and do your work. Now, there is a question about audited financials mandatory for organizations with revenues less than 3 million. If you elect to take a small business relief, because what is the guarantee for them that you are doing 3 million dirhams, right? If you have a small business relief, now they will ask you for documentation, what you are going to give them, right? Now, if you don't elect to go for small companies, yes, you are right, it's 50 million dirhams. If you don't have any election or you don't have 0% qualification. Look, there is a rule for 50 million, absolutely, you're right, but only if you don't have 0% rate. If you are paying 9%, it's 50 million, yes, but you are not paying 5%, so 9%. So they can come and ask you, okay, where is the proof that you have only 3 million dirhams? Where is your audit financials? This is a possibility which, even if it's not written anywhere, we recommend to anybody who will take a small business relief to say or to have an audited financials. So at any point of time, if somebody come and check, you are 100% secure and there is no risk from this area. Okay, so the next question is, which type of cloud-based software independent can be helpful for computing the corporate tax calculations? Well, actually, there are so many. Now, I cannot suggest the specific names, but you can actually go to the FTA website. FTA website will have a list of approved softwares from tax point of view. Many of them are cloud-based, and you can actually choose any one of them which will suit your budget eventually. Now, another good question. Corporate tax liability is calculated only using profit and loss. His balance sheet is taken in account for tax liability. No, it's actually only on your profit. Now, after you finish your financial statements, you have the B&L. After you finish the B&L, you have a profit. This profit, either you make deductions from this profit or addition to this profit based on the situation and the study or the final calculation for the taxable income. Taxable income means taxable profit. The balance sheet is going to be used only as a reference if they want to review your financial statements or to ensure that all the figures are tallying, everything is okay, but they are not going to use the balance sheet for any kind of tax liability calculation. The next one, to avail the small company relief, one have to look on the TO of previous year or even to look on current year also. Now, when you say previous year, if you are referring to 2022, right? No, you should look to 2023 only, because 2023, as I said, the financial statements will be used as a closing balance for 2023 and the opening balance for 2024. So how much are you going to do in 2023? Is it less than 3 million dirhams? Are you expecting to have also less than 3 million dirhams in 2024? If you are, then you can go for a small business relief. Now, how change in the shareholding will help in corporate tax planning? Well, this will help if you have, well, there are so many actually scenarios I can think of, but I will give you only one scenario for this. You have a shareholder who owns other companies. And these other companies, he have a share in the other companies, 51%. So all transactions with these companies has to fulfill transfer pricing and arm's length. So if you can actually change the shareholding to make it one tax group, then it will help you to minimize your tax exposure, and also it will remove the burden of having transfer pricing documentation, and you don't have to worry about being at arm's length with your related parties. Let me give an exact scenario. An owner, a shareholder, who's having 51% in 20 companies, or 49% in 20 companies, and somebody else is having the rest, and the same structure is everywhere. Then, if you create one holding company to have all of them and own all of them by 100%, it's much better for you. Why? Because you can make a one tax group, and if a company has a loss, it will be offset against a company which has a profit. And there are so many other situations where we can say shareholding is different, or making a shareholding makes a lot of sense. If a bill in the name of the company by paid from the owner's credit card, this is deductible expense. Well, so if you go and tell the FTA that the owner is paying from his pocket, and this will raise a question, why he's doing that? Because you have a bank account. If you have a bank account, then you know naturally you have to pay from your bank account. This will raise a lot of questions which we do not advise. It's better to have the credit card in the name of the company itself. And I'm sure all of you can actually share, you can issue a credit card in the name of the company very easily. So our recommendation would be there to avoid any argument with FTA, because argument with FTA is not easy to win, right? It's better to have the credit card in the name of the company, and it's better to have also the payment coming from the bank account so it can show on your bank statement, because bank statement is one of the elements which will be used during any audit, and it's happening now for VAT as well. Are the staff bonuses taxable, or is it an expense? Staff bonuses, if it's according to the company policy and it's considered as a wage or salary, not as a profit, then it's not taxable. It has no relationship with tax, and it's expense. And since it's not taxable, there is no percentage whatever. Now there is a question about, is it mandatory also for offshore companies to register for CIT? Now, is this offshore company registered in UAE? If yes, then yes, they have to register. for they have to register for CIT. That's correct, yes. And I'm sure you are referring to the offshore companies issued licenses issued in free zones like Jabza. Yes, they have to register because they are supposed to be inside the country, or they are registered by the country. So they have a license and therefore they have to register. What is a tax group of companies means? It means that a group of companies have done or coming together to make a one tax group. So any transaction between this tax group do not have to follow the arm's length transaction. Any transaction, all the profit for all these companies will be put together in one particular pot, and then you will calculate the corporate taxable income from there. Same like the concept of bad tax group. Now, another question about if a company has a revenue of 80K USD per year, do you advise to register it? If the company is having a license from UAE, it has to be registered. There is not an option, there is no threshold for it. As I said in the beginning, there is no threshold for it. So yes, it has to be registered. And 80K, I think it's about 400,000 dirhams. So anyhow, you will pay very minimal amount of tax, and you can take the small business relief also, if it's one company, not a multinational, and all of that. Can you please throw some light on the related party transactions, especially on the remuneration to shareholders, directors, employees? Now, okay, well, I will go to because of the time and so on, I will go to the remuneration for the directors and employees and all of that. As long as you are following the market. So let's say, for example, you are paying money to the shareholder as a salary, right? Do you have a labor contract with him? Did you do a study and survey in the market for his designation, and you have a documentation to support the money you are paying him that this is natural as per the market? If you have that, then you can do it and no problem with that. That's number one. Number two, about related party transactions. If you are in the same tax group, you don't have to worry about it. If you are outside the group and you are dealing with related parties where you don't have a tax group with them, then you have to maintain arm's length principles. Does an organization has to apply for small business relief in advance or once the tax year has passed? Once the tax year has passed and you are making a tax return, you can apply for a simplified tax return. When you are posting the tax return, you actually have to choose something called simplified tax return, and you have to elect for a small business relief. Okay, my business is under local sponsor name and he sponsored 100 companies like me. What is the scenario about me? Now, this is a scenario which we have faced in the past so much. According to the foreign investment law, you have to check if your category or activity you're doing is allowed for you to own it 100% foreign ownership. If it is allowed, we recommend that you move it in your name 100% and make it LLC. Please don't make it sole proprietorship. If you qualify for the relief, would there be any point of not applying? Well, actually, no. If you qualify for the relief, you should apply. There is no point in not applying unless you are looking for a better benefit of making a taxi group, for example. Or let's say, for example, if you do the calculation and you find the amount which you are saving from the relief, right, will be negated by some kind of adverse actions, such as, for example, I can do a tax group and I can save more money if I do a tax group. Or you have some kind of a scenario where doing this tax relief that will not allow you to pay tax, and then you have international parties or somebody is dealing with you and he needs a proof that you have paid your taxation. There are several other questions may arise, but if you do qualify for the relief, it's a standalone company. You have no relation whatsoever with any situation where you need to prove that you have paid tax for the specific years, for these specific years, then please go ahead for the relief. For example, we applied small business relief, and on 2026, our revenue exceeded 3 million. What will happen? When you are making your tax return, you cannot take the simplified tax return. You will not be automatically shifted. This is election. That means when you are actually doing the filing, you have to elect yes or no. CT is valid from June 2023. If my organization follows the Jan to December cycle, then do I need to pay CT for entire year or only for the period June to December? Actually, you need to pay for the entire year, and your tax return deadline is December 2025, because your financial year is from January to December. That means your financial year is 2024 in full. That means you can do the tax return in 2025 in September. We received our international shipment through a local shipping company. They receive the shipments in containers, break them. There is no proper documentation. Well, this is a question which requires more discussion, right? And I'm not pretty much sure about the subject without knowing more information about it. Now, this is the last question we will take due to the time. Are the salaries of the partners taken as expense? If yes, then how these salaries are decided and recorded? Now, yes, the salaries for the partners can be as an expense, and it's decided based on each company doing a study in the market and making sure that the same designation in the market is taking, let's say, for example, 10,000 dirhams, then your partner should take the same or less. Also, with the same all kind of allowances. You can give them HR, you can give them whatever allowance you want. Well, there are other questions which I will actually, we will try to put them together and make an article for them or something, or make another webinar on all the subjects. But due to the time, we have to excuse from you, and thank you very much. You have our contact information. And we wish you all the best. And please contact us if you have anything, and we will continue doing these webinars and these sessions. And we are planning to have question and answer sessions only for the sake of answering maximum questions we have. Thank you very much.
And sure. Okay, thank you. Thank you to everyone for joining us and sharing in this enriching experience. Your presence and active participation have truly made this session valuable and impactful. We look forward to connecting with you again in our future webinars. Until then, for any further queries regarding excise, VAT, or corporation tax, kindly drop us an email or give us a call. The details are mentioned on the screen. Thank you.